What's up, Outliers? Thankfully today, my house did not catch on fire. There was actually a fire that was not too far away from us. We got through there unscathed, which was great. And looking forward to talking with you all about the markets today. So here is our game plan. We're going to spend the first part of the session. We're going to just look through the markets, recap what went down today. We're going to talk a little bit about some like primary market themes and stuff. And then from now on Wednesdays, we are actually going to integrate a specific skill for a skill development segment, which will be towards the tail end of the stream. So the goal behind the skill development segment is what I want is for us to have a very, very clear takeaway when we're at the end of the live stream. So we should have a specific skill at the end that we're like, yeah, okay, I learned something new and I know how to potentially take this forward. That's the entire idea. Now, of that, we are going to follow the skill development section and we're going to talk about a case study. This will be for the pro live stream tomorrow. So Wednesdays, we'll do skill development, second half of the stream. The skill that we learn on the stream will then feed into the stream on Thursdays. And for those that are in the pro segment, it'll just be a pretty more zoomed in version, right? Like we're actually going to have specific case studies and to help drive those segments home. So idea for everybody is you should have a clean takeaway at the end of this. The skill development that we're going to talk about today is actually a money mindset exercise. And this is the way we're going to approach this is to talk about how everybody can create their own and how this feeds into your broader planning. Because when we talk about this kind of thing, it has a very, very significant guiding impact on how we make decisions and whatnot. So that's the game plan. Let's see who we got. Looks like we got Why Not, Mock Chicken, Hater, N54, Dookie Pie. That's a fun one. Why Not is already there. Zachariah, Mateus, James, Lauren, Zach. We got everybody. Oh, wait. Zach's saying that the cat just tweeted. Hold on. Let's see. He did. What'd we get? Interesting. Let's see what the cat says. Cat's waiting outside, or cat. The dog's waiting outside. It was 2 Jan 2020. Still waiting. I'm assuming this is like waiting for the squeeze. That's my best guess. At no understanding yet. It's like opera music of some sort. Cutting down the tree, dog's getting old. The sleepy dog. They got tired. Dog went away. Tired dog. Okay. Weird. We'll have to spend a little time figuring out what this is. We'll help get the word out for whatever that is. Now, back to the agenda for today. We will talk about this money mindset idea because it's a feeder into everything else that we do. And before we get into the broad market, one other announcement, our leaderboard so far for the month. For those that don't know, we have the Discord. It's completely free to join. But the Discord, the lifeblood is participation. It's people sharing information, helping one another and stuff like that. So we want to reward those that are actively helping other people and actively participating. So what I'm doing is at the end of each month, the top 10, obviously I will not be a part of it, but the top 10 will be entered into a random drawing, and then you'll either get like an Amazon gift card or you'll have a chance to hop on like a 20-minute one-on-one call with me, your choice. So if you want to grab something sweet, I don't remember exactly what we picked. I think it was like 15, 25 bucks or something like that. The idea was to like grab yourself a coffee. It's not like to just give money just for the sake of giving money. I always feel like that's kind of lame. It should be, tied to something. So the idea was to like help somebody go grab a coffee. But then I realized not everybody has a Starbucks around. So this is who we have in front so far. We have Urzul. We got Joe, Callahan, Reek, Sky, Dad, Bod, Better Grab Chalk. That's a fun name. Doorknob and Studious Old Man. These are always hilarious, all of the different handles. So that's who's up front. Time for markets. So where are we at? We're at 12:30. Let's update our thing. Market overview. Let's see what the deal is. The relief rally, in my opinion, is now pretty confirmed. We have a very firm gap up and close above this prior like 601 and a half handle. And the market was pretty decisive on closing up here. So inside day once it got up here, but that's a pretty decent gap up. So this downward trend is now invalid. This downward trend is broken. And we now have a new local high. This is the local high that I told you was really, really important because it needed to exceed this local high to actually signal a change in trend. So we had this close above that local high, and then we had a confirmation close above that local high today. Now, a couple notes. Just because this happened doesn't mean it can't crash tomorrow. One of the problems people have when they apply this kind of methodology of analyzing and trying to come up with conclusions like this is we start to believe too much of our own Kool-Aid, which means we can see things, we can identify trends, we can come up with ideas, but they're not prescriptive. The market will always do whatever the market's going to do. So what that tells me is right now, though, based on what exists today, this looks like an assumption of a new trend that's been confirmed. So that leads to a slightly more risk on portfolio. Now, on Thursday, my game plan is Tuesdays when I drop the video, that will be GameStop specific because I want to focus on that a little bit more, and especially now with the cat coming out, I want to get back on an actual regimented cadence of looking at it and reporting out to you guys. And then Thursday is going to be looking and reporting out the covered strangle holdings. So the specific model covered strangle portfolios that we've been talking about in TQs, UPRO, IBIT, and then GameStop if anything happens in there. So we'll spend a little more time talking about those specific positions tomorrow on that video. But right now, I actually have a couple short calls that have fallen in the money that require management. I did some small stuff a little earlier today, but just in terms of the covered strangles themselves. Now, from a broad market perspective, there are a couple really key themes that I think are worth your attention. The first one is bonds are just about stabilizing. They had their gap up yesterday, and then they had a pretty big down red day today. This is a decoupling from its correlation with equities. So yesterday, market was up, bonds were up, direct correlation on the day. Today, market was up again a little bit more, and bonds are down today. So the correlation between equities and bonds is still a little bit all over the place. This is important from a portfolio structure standpoint. If you're using bonds as like your risk off asset, it's difficult to see how risk off they actually are at this point. So you should at least be aware of that. When we look at small caps are lagging. Small caps still are nowhere near this local high, whereas S&P is closing in on the local high, and Qs is not that far off, 531 versus 539. So Qs is within striking distance, and small caps still a ways off. So this tells us that the market is still really pensive about rates, about inflation, and about the impact that this is going to have for smaller companies. Otherwise, we would see this same movement in small caps at this point, because all of this other news is already priced in. The probability of the rate cuts has been priced in. All of this stuff has been priced in. And there's been no real new news that leads us to believe inflation is starting to pop back up or anything like that based on the breadth of what we see. But if we take a look at the Fed Watch tool, and let's take a look at the historical run rate here, you can see that there's still essentially 97+% chance, and this is for the last week almost, of 425 to 450 target rate for the 29 Jan meeting. So we're looking at no change. That's the overwhelming probability. That's what it continues to be. Let's take a look at compare. You can see it's not even changing much. So very, very little change going on here. Now, I've been watching a bunch of Trump's recent speeches to understand, what his position is on stuff and what we can expect. So I posted this and I'll reiterate it. I posted this in the Discord that Trump was vocalizing the potential of a 25% tariff on both Canada and Mexico. He was talking about potentially another 10% tariff on China. All of this as early as the 1st of February. That's an important note because, again, depending on how that progresses, what direction that goes, that will be a big deal if it actually comes to fruition in that way. Specifically, the impact to Mexico and Canada. Those are ones I'm very, very, very interested in seeing how they unfold. So when I say interested in seeing how they unfold, this means that I'm watching all of the news that comes out in support of the broader topic. So that means any piece of news article, I have a specific GPT that helps me comb for any key terms related to this stuff. And it's because the market is going to price on that. So if it looks like it's starting to become more and more realistic, I think that you'll see the market begin pricing that kind of thing in, because the short-term impact will be not, end of days, but definitely impactful. So we have to keep an eye on that. So the next thing, from Tommy Trump, I hope Stargate opens a portal to another universe. That would be super cool. Let's take a look at the Stargate. I know that there's been a lot of news about that today. Here. So let's take a look at OpenAI's, and then let's take a look at this and this. This is funny. So one of the things that we have to pay attention to is that the news, as far as I can tell so far, is doing everything they can to make this relationship damaging. I just noticed this over and over and over again. I see news articles saying like, oh, is Musk the new president? And obviously that's a play on Trump, challenging his authority, making it seem like Musk is the one actually calling the shots versus Trump. And I could just tell by the phrasing of these that we're trying to pit the two against one another. Now, I don't know the actual relationship. I don't know either of them in person. I have no idea. But I can tell you by the framing of the articles, that is part of what I can pick up from here. So let's take a look from OpenAI and see what OpenAI says. It says the Stargate project is a new company which intends to invest $500 billion over the next 4 years building new AI infrastructure for OpenAI in the US. We will begin deploying $100 billion immediately. The infrastructure will secure American leadership in AI, hundreds of thousands of American jobs, generate massive economic benefits for the world. The initial equity funders in Stargate are SoftBank, OpenAI, Oracle, MGX. SoftBank and OpenAI are lead partners for Stargate, with SoftBank having financial responsibilities, OpenAI having operational responsibilities. So let's take a look at this. Tesla and SpaceX CEO Elon Musk said OpenAI, Oracle, and SoftBank don't actually have the money to back up their pledge to invest $500 billion in AI infrastructure. Trump touted the joint venture, dubbed the Stargate project, on the first full day of his second term. SoftBank has well under 10 billion secured. I have that on good authority. Musk wrote overnight on his platform X. They don't actually have the money. I genuinely respect your accomplishments and think you are the most inspiring entrepreneur of our time. Altman wrote on X. Yet Musk's claim about SoftBank liquidity was wrong, as you surely know. I realize what is great for the country isn't always what's optimal for your companies, but in your new role, I hope you'll mostly put America first. So a little bit of back and forth here. Now, for those that don't know, there is a little bit of tension between OpenAI and Musk. Musk has a history with the company, but then he also has a lot of like very different personal opinions than Altman. And the reason why I highlight that is because as you see this going back and forth, just having that context behind the relationships, I think is useful because it helps us process some of the information that we're seeing. So yeah, it's kind of like whatever. The interesting component for all of this though, is there's obviously huge focus on AI. That's the top line takeaway from a trader's perspective. What matters to us? What can we actually make money off of? What can we make trade decisions on? Is tons of interest in AI. And we know this already, but seeing more and more focus and money being talked about in that space will continue to drive some of the key AI stocks that exist. N54 says quantum computing. Quantum computing, I think by all accounts, is a pretty long ways off. So I think quantum computing is still a thing. I think people are interested in quantum computing. However, I do not think that quantum computing is going to be a massive focus in the near term here. And a lot of that is because it's still a ways away from mainstream adoption in ways that can like really amplify productivity and drive revenues of some sort. So first question for ChatGPT is create a list of the top 20 AI involved companies sorted by market cap. And let's see what that comes up with. So I think we can clear out of this. And while ChatGPT is hooking us up with that, let's take a look through the broad market really quick, just to understand what breadth looked like today. Let's get into overall momentum. A lot of decliners. So a lot of what the fuck? I'm looking at the output and there's a couple in here that really confuse me. So I think I need to refine that. Refine this not to be companies that integrated AI, but companies that enable AI. So both 59% decline there, 70% decline there. So both are in bulk of decline on the day. Interesting subtext that you can pick up from that, where that's a lot of things being sold off. I think there's been a lot of really significant focus on the relief rally and how strong it is. And again, based on what I see today, it looks like the relief rally looks pretty strong. It doesn't mean that it's impervious or that it's not going to wane at some point, but the fact that there was a subsequent gap up today is pretty telling. But it is a little bit interesting because I don't think we want too much upfront pricing and gapping up like this before we have some clarity on, for example, the tariffs and whatnot. Because if the market starts getting too far ahead of itself, as we've seen it do multiple times, especially with the rate cut environment, then when we get a potential pullback based on new news, it tends to be way more aggressive than what we would want to see. So the reason why I mentioned that, again, taking it back to a trading lens, a trading perspective, is if we start to think that the market is starting to get ahead of itself, it's rallying too hard, too fast, that starts to set us up for a bigger fall. That changes the way that we might use our portfolio and what it might go into. For me personally, that means that the way that the covered strangle overall allocation, not just the sample allocation that I show you guys, but like the total allocation, which is still the bulk of the portfolio, will be managed, because I don't want to get caught too heavily to the downside on a potential fall like that if there is new news that sends the market in the opposite direction. So that's that. Let's take a peek at sectors. Energy dying. We talked about this literally yesterday. We talked about the key breakdown between these two averages, the 20-day and the 5-day. When you see this big of a break between the 20-day and the 5-day, this is really, really dangerous. And it means that there's been a bit of wind at the back, but it's starting to wane. We actually spent a decent amount of time on the stream yesterday digging into the internals of energy, figuring out what companies are actually leading the decline, what companies are still showing resiliency, because there are some of them. So if somebody wants an energy play, they're there. There's stuff there that is available still. It's just not the sector itself is starting to show some weakness. That weakness seems to come from a couple different things, but a lot of it looks like profit taking. There are not insignificant volume nodes that we can see in energy that are now just getting to the point where they're showing a little bit of a profit. And a lot of people try to take the exit there when they can. Conversely, we see communication services showing a massive deviation in the other direction, meaning strength on a comparative basis. The same methodology we can apply to take a look at materials going from 93% above a 5-day MA to 64, and we can track the change in the 5-day, right? So one of the things I will look for, I think it's, where is it? Hold on. I think there's another, maybe it's down here. No, give me one sec. This. So this, we can track the day over day change for the 5-day. This is looking at highs and lows for a specific sector. But we can look at this on a larger basis. And we can track how the sectors are moving on a day-by-day basis relative. So yeah, it looks mostly tech dominated, which makes sense. Tech has been slowing down for a while, and that didn't really feel right. So this looks closer to what I would expect to see here. Let's take a look at the S&P 500. Yeah. No big shock. And financials are rolling over a little bit. That's kind of interesting. Now we also have earnings. So let's take a quick peek at earnings that have come out so far. So we had KeyBank, Triple M, Schwab, UAL, Netflix, Capital One Finance, STX. And let's take a quick poke through all of these. And we just want to see how the names are behaving. We want to get a sense of how earnings is going in general. So I'm going to dump them over here on this little chart above my head. You can still see it. It's just a little smaller, but that's okay. So Key, funny enough, had like a bigger gap pre-earnings. That's funny. Let's take a look at MMM. Yeah, MMM had a great earnings. So what did this come in at? 168 compared to 166. So a slight beat, really good. Really good forecast, I would surmise. But this also would be something to watch for post-earnings announcement drift. These kinds of things tend to look really good. Sanjay says GME is pumping now. Any news? The news is the cat posted on X, which crazy. But that's the news. But that is the news. The cat did post, and as you all know, when he posts, GameStop will move. We have learned that for sure. All right, let's get back and see what else. So Triple M looks good. That might be viable for a continuation move. Same thing for Schwab. That looks good. UAL. Inside move. How did they do? Oh, they beat. They came in at 326 versus 3 and a penny. So they looked okay. And how did Netflix do? Beat to the upside by about a dime. Big gap up. Big gap up into a fade down. That's interesting. That's a lot of profit taking. COF. Beat upside. So one of the themes that I hope you can identify as we're doing this, and we're looking at a lot of these, is there's a lot of beats. 203 first $1.67, and these are across different industries. The reason why that matters is because it gives you a general sense of where the broader market sits today. So let's take a look at some of them from today. My earnings plays so far have been pretty good. We're not seeing like crazy moves. Johnson & Johnson. How did Johnson & Johnson do? Eked out a profit. It was expected at $2.03. It came in at 2 and 4 pennies. CMA. Don't know how that is on a relative basis. And then Halliburton rolling over. Still beat by a penny, but rolling over. ABT. Very, very slight beat. PG. That also gap up on a beat. $1.88 slight beat. And then last one, Ally. Another beat. 78 cents versus 60. Pretty big beat on that. So now let's take a look at the rest of the week really fast. What time we got? We're about 5:30. That's okay. And this is not what I meant to click. That was funny. I accidentally just clicked my Reddit browser, or like my Reddit tab, versus ORATs, because they're both just orange. So my brain literally was just like, yo, orange, click that one. And let's sign in. We want to take a look at the remaining for this week and maybe plot out a couple trades super fast just to see if stuff looks good. So I'm actually going to grab my watch list for my actual like portfolio and stuff here for a second. And then we'll take a look at these. So we are now looking at Thursday PM, Friday AM. And see if there's anything else we need to add in. All right, here we go. So Thursday PM, CSX. CSX tends to be a decent one. We'll see. We have SMCI, PXN, and then Friday morning, AXP, NEE, and VZ. Cool. So now let's look at these. Whoa, what the fuck? There's nothing there. This thing is fucked up, right? Whatever. All right. Let's take a look. So CSX. This is fine. Yeah, this is okay. What else we got? Take a look at SMCI. SMCI will be a pass. EXN. We'll look at the pricing. Yeah, this one looks okay. AXP. This one I will probably play, but in a slightly more nuanced way than like just a standard earnings, risk premium. NEE. I think I already have a position on in NEE for a directional play, so nothing in there for me. And then VZ, nothing. Might actually just trade it to the downside, but VZ is no good. Cool. So there's our quick rundown of upcoming earnings. And we can pivot really quick. If there's any specific questions or anything that you guys want to take a look at together, now's a good time to do that. And then we will get into the skill dev section for what we're looking at. So this will be just kind of general Q&A, flipping through stuff. Mateus says, NEE have liquidity? Yeah, it does. Yeah, that's fine. It's what you would expect for a smaller market cap company, but yeah, it's got plenty of OI and stuff. There's nothing wrong with it. James says DHI up. Is housing becoming a thing again? Materials is. So materials has been doing pretty well. So if we take a look at DHI, I mean, DHI is not really up if we're not really doing shit. What was it expected at? I don't know what DHI's expected earnings were, but I mean, it's at like up $5 from 140 to 145. So still, I actually think DHI is an example of dying, but materials as a sector is doing here. So you'll probably see a little bit of sympathy move there. And then real estate started having a really slight relief rally, but this was also really, really soft, like really, really soft. James says second biggest gainer in S&P today. It doesn't really mean anything, right? Like when we say second biggest gainer, but it's something that's up 2.2%. Like who gives a shit? Doesn't really move the needle much at all, and it's still down lower than where it was here. It's still like in an overall downtrend. You can't really take a single day like that and apply it into anything super meaningful, but it's still just super weak. It did start consolidating here for a while, but yeah, it's still just super, super weak. Now, it did pop on the 14th. That's a little interesting. I don't know what happened then. Do you know? What happened on the 14th? Goldman Sachs adjusted price target to what? Wait, did that say from 171 to 200 or the other way? Because that confused me. Hold on. Yeah, it adjusts the price target from 200 to 171, and somehow it rallied on that. I am confused. I don't get that. I don't get that at all. That doesn't seem to make sense, does it? What else? Maintains a buy? Maybe that's why. Oh, maybe this is it. So on the 13th, what time was this on the 13th? 13:17. So this would make sense after the market closed. DHI announces restructuring of its operations to separate the DICE and clearance jobs business, 8% workforce reduction, and it sees 2.2 mil in cash charges, expects annual cost savings around 4 to 6 mil. So I think that's a big part of the move that you saw today was stemming from this. Let's take a peek at the options really fast. Yeah, it's kind of split, even split, calls, puts. Doesn't really look Doesn't really look too great to me. Yeah, interesting. Hard to borrow. That I find also curious. And it still is sitting on a market maker move, which is also curious. Where are these options at? Let's eyeball it first. 21 Feb and 16 Jan. I think those are where we'll see the biggest ones. 9,000 there. 7,000 there. Yeah, so those are definitely the two biggest expirations for sure. A lot up front in 21 Feb and a little bit of call skew there too. And then out in 16 Jan, pretty heavy call skew. This starts to look like people are expecting a little bit of a turnaround here, which is actually quite logical. If we see something that's been punished a lot and we think that it becomes overextended to the downside, we can absolutely think about when it might start to make a recovery. And people will try to do that because, you know, you want to front run. You want to try to get a slightly better price for whatever it is that you're getting into. And that's it seems to be, that's what the general idea behind what I'm seeing here at least. But yeah, I mean, I definitely wouldn't call this up or doing well. It had a 2% day, which is completely unremarkable across the board. There was some stuff that actually had some really strong moves today. Like, oh, that actually reminds me. Who was that? James, thank you for bringing my brain around to this. I needed to set up another screener. So right now I have one that does like a gap up, and I like the gap up. That's useful, but I actually want to see intraday price moves as well, which I don't have. So we'll do percent change. The latest percent change. We need options. We need total OI. We want OI of at least 2,000. And then this can be just essentially greater than 0. As long as it's greater than 0 is fine. Let's see what this produces. I don't want this and I don't want. And then 904. And we want this sorted by the percent change. Yeah, cool. So we'll save this. And then this will come out as an email. We want to sort by percent change, descending. This one can come out midday. We'll take the top 25. This will be percent change. What made me think of this was, James, when you were just talking about some of the stuff that was moving today, because there were quite a few names that were showing like pretty significant strength today. So I don't know if you guys saw, but ARM, big gap up, really big gap up. This is a clear breakout, a sustained breakout on volume. This is a pretty decent setup. I didn't like the movement coming into it here, so it's not like my pick of anything, but this is a pretty strong gap up. Then there's NNE, not to be confused with NEE. And NNE, I also have a position on. I was trading the breakout essentially from here. So I'm still just following that breakout, kind of trend following it a little bit because now it's firmly broken out, but we'll see how well that holds or if we get a short-term turnaround and stops us out. Netflix was up 9.7% today. And I think somebody made a comment in the chat before, if I'm not mistaken, somewhere different. Dark Mark says Netflix is about to raise rates. And I think you guys said, there it is, Roderick. Thank you. Roderick was saying Netflix had killer subs. So I didn't look through Netflix earnings itself because I honestly don't really care, but the market liked it and it had a really strong move today. That's a big gap up for a company of this size. And this, I'm actually running a study right now on large cap, mega cap stocks that have outsized earnings releases followed by a really strong gap up of at least 5%. And what's the frequency that those follow through into post-earnings announcement drift? Because for those that don't know, there's a really big series where we have long-term post-earnings announcement drift that then starts to slow down and contract, especially in really big stocks. It's because it has better price information. It's more informative, so there's less price shocks. Then we start to see some of these names accelerating in bigger ways than the prior research would suggest. So I'm actually in the middle of running a study that now specifically on mega cap stocks. That's something that we'll go through on one of like the Tuesday or Thursday streams for the pro members to see like just what the output is. Because once I have it, I'm actually very, very curious. My underlying suspicion is that there will be specific conditions that we can identify specifically for really big companies, mega caps, that if set criteria are met, it will have a pretty high probability of going through with drift. Now, it's so important to not overfit the data and set criteria that just happens to capture the movements. So that's the biggest problem set trying to solve for is like what criteria makes sense, what criteria is overall robust, but is not overfit to the data so that we can actually have something that's tradable. So I'm starting to think, I really am starting to think that we might see a bit of a change in mega cap stocks as far as the receptiveness to post-earnings announcement drift. So this is going to be a new add to that for me to pay attention to because it's a really tradable event. And the other thing, just to summarize a little bit more of that thought, is I'm also expanding it to the host index. So I want to see if the index shows any price shocks relative to the larger components having near-term price shocks from something like earnings. So we will see. This move, though, is really interesting to me because it had obviously an incredibly strong gap up. But I mean, it got sold off into that all fucking day, which is not super bullish for like post-earnings announcement drift. So we will see. Too early to tell. Cool. We have time for maybe a couple more. So anything else you guys want to take a look at? Dark Mark says thought on Palantir earnings and its recent movement. Yeah, let's take a look at Palantir, PLTR. Do I still have something on in here? Give me a sec. I am out. I used to have a position on not long ago. I literally took it off today. Why did I take that off today? Oh, because I was rotating into something else. I see. Yeah, so that one I actually had pretty short-term options on. So yeah, for Palantir, I was in the 21 Feb 55s, and I had gotten into those on the 15th here. So really kind of a bit of a sad little baby move, but the 10 points is fine. With options, you can do okay with moves like that. And it's actually still moving in the correct direction. My typical move there would actually be to scale off just a little bit and leave some runners on, but it just looks like the velocity is slowing down. And there was a couple other things that I really wanted to put on. So right now my breakout allocation is essentially redlined. So I needed to take something off in order to put on more breakout stuff. The way that I manage the breakout allocations like that is I have a total allocation with respect to risk, not the dollar amounts being used. And the reason for that is once you have a bigger account, you'll find that your positions are going to get stopped out faster in terms of managing risk at 0.5% or 1% of the total portfolio size as compared to how much money you're going to use to put those positions on. So let's say, for example, you wanted to use 10% of your portfolio value on that. Well, that could put you in front of way more risk than you think you should take given a specific strategy. And for me, breakouts, they're really mixed probability trades. I'm typically lower win rate, but a much higher severity when I win. So trying to keep it structured that way is really, really important. From a long call for the last 3 months, looking at the last 3 months, the win rate is 48.9% on the breakout specifically. So that means, 51% of the time I'm taking down a loss. So it's literally the majority of what happens for breakouts. And it's because the loss on breakouts is managed really aggressively. And that's designed, again, to take asymmetric risk. We don't want to, well, I should say I in this case, because I'm talking about me very specifically here. I don't want to have positions where I have a directional thesis specifically for a breakout, which is a very specific profit mechanism. You don't need a lot of time to see if you're correct or incorrect on a breakout. Like it's going to tell you. So we don't want to spend a bunch of time waiting to see if it's correct. And if it starts compounding against you because it's going to be a lower probability trade, you have to be really, really thoughtful on managing the risk side of that equation, because you cannot have a situation where you have a even moderately high loss rate, or in my case, for the breakouts for the last 3 months, clearly a majority loss rate. 51% is a majority of those trades are losses. But they have to be, as long as those losses are nice and small and the winners are multiples of those, it's a highly successful strategy. But you have to maintain that profile. If that profile changes too much, you're kind of fucked. It's not good. So yeah, Palantir in the near term, I still think has a way to go. And the reason for that is because it needs to get above, again, this local high. Now, it looks like it wants to do it. And based on the movement that we saw today, it's placed in a pretty good volume node here over the last few days, and then the tick up in volume today. So this looks good to me. But you can see all of the different levels that I'm really interested in with respect to Palantir. I had also short puts in Palantir that I was trading separately. And that was actually getting ready to take on shares, potentially like prospecting to take on shares. That highlights a shortfall of selling puts to acquire shares, because a lot of times you're going to get left in the dust. But I think it still has a little ways to go. I think the proving grounds right now is above 80. But I think as long as it stays above 74, it looks like it's in a healthy spot to consolidate. Even if it trends a little bit sideways here, I still like it way more to the upside than to the downside, that's for sure, especially for a longer term play. I still think Palantir is positioned so incredibly well across all of its business units that, I mean, for a longer term thesis, I think it's, a pretty easy ticker to like from a longer term perspective. So yeah, thanks for bringing up Palantir as well. I like taking a peek. Let's take a quick look at the op. Yeah, big call skew. A lot of them are out in, what is this, 18 Ds? 24 Jan 25. 21 Feb 25. So a lot of near term, interestingly. We have a bunch of green. What are these greens? 21 March. So it's kind of all over the place, which is good. Seeing it all over the place like that is good. It means people are playing this to the upside across a lot of different time frames, which is very tradable. If you see that kind of movement, then that's what we want. All right, cool. So let me pivot now, and I want to do our skill development section for today. And then at the end, we'll still have a couple minutes for some more questions and stuff. So if I didn't get a chance to answer whatever you want to look at, just bring it up again in a few moments, and then we'll dive back into it. But I want to do our skill dev. And again, this will feed into a case study for tomorrow for the Pro members. So everybody else that's not there, that's what I want you to focus on is the skill itself. And at the end of this, you should have a clear understanding of what the skill is or the topic is that we're talking about, and why it's relevant to you, and some ideas on how you can use it going forward. That's the important stuff here. So For skill dev today, we already talked about it. We're talking about the money mindset. And there's a specific exercise for it, but it's not about the money mindset exercise. It's literally just about money mindset. And I refer to this as actually an outlier money mindset. And it's just because a lot of people have a average disposition towards money. And again, the reason why I say outlier money mindset is it's kind of dual purpose. Outlier because that's us, that's our community, but then also to signify that we have to think about this stuff differently. That's the most important part. That's also why the channel is called the Outlier Trading Channel, because in order to do well at this stuff, you literally functionally have to do stuff differently if you want it to work. So let's talk about this. Let's talk about this money mindset idea and how to actually use it to do stuff. So I'm going to expand this over, and then I think we can cut this down. So you can see the learning objectives are really high level, right? To build a healthy disposition towards money, which I regret to inform you, the overwhelming majority of us don't have that. I did not, even when I thought I did. So I want to talk about this in that context. First thing, let me grab the chat just because I need to use another window and I want to keep an eyeball on you guys. So I have a poll to get us started. And let me grab the poll. And I'm going to type in our question. How many characters do I get? 100. It's open-ended, but it's yes or no. So the question that I just asked is, do you have a healthy relationship with money? And that's whatever it means to you. Whatever that means to you. It's not a defined thing, and I don't want it to be defined in this context. I want you to think about whatever that means to you and how you feel towards it. That's all that means. So when we think about having a healthy relationship with money, there's probably a handful of things that will come to mind for us, but there's a couple things that are really, really important. So it looks like we have 70-30 split, yes, no. And I am interested in both of these responses just to probe just a little bit. So for anybody, if you don't want to answer, you don't have to, but I would love to hear from somebody. From the yeses, is if you were to summarize how you have a healthy relationship with money, how would you summarize it? So like if somebody walked up to you and they said, man, I'm trying to have a healthier relationship with money, what's the one sentence thing that you would say to them that you think you're doing that is leading to you to having a healthy relationship with money? And then for somebody that says no, what do you think you're missing? So when you're analyzing yourself and your relationship with money that's leading you to the conclusion of no here, what is the data point that you're crossing mentally that you're like, this is the thing that is fucking me up? I don't understand blank, or I think too much about this other thing, whatever it is. So I'm interested in both. So Travel Ursel says, for me, healthy in this context is that treat it as a tool. Interesting. I kind of like that idea, and I think we can expand on that. Okay, so it looks like a lot of you were referring to the healthy relationship in terms of budget. So Blonde, Swayze, and Mateus says, I don't spend more than I earn or more than I have. So that's kind of like a budgeting take on it, which I agree with. I don't think there's anything wrong with that. So let's, as always, analyze the landscape. We need to create an orientation for ourselves. And the easiest way to do this is to start from the top. So the next question for you guys, I'm not going to put it as a poll because I kind of need qualitative answers here. The very first thing. And I'm phrasing it this way purposefully. What is money for? What the fuck is money for? And we're not going to spend a lot of time on this esoteric stuff, but I want to get to the brass tacks of what this is. James says, the more I redistribute it, the more that it comes back. It's weird, but it works. I think that's actually a bit of a perspective skew, to be honest. I don't think that that functionally is like, I would challenge that from a functional perspective. Now, I want to be clear. I actually fully agree with you, but I think that's more of a perspective than a functional component. Here's why I say that. Because my mom is one of those people that for a long time, she did not have much money. And she was still as giving with her money as she could be. She was too giving. She gave money that she didn't fucking have. So I think for somebody like that, I think you actually can run into a bit of a scenario where the more you distribute it, the more it comes back. It's not inherently so. But I truly understand the sensation that you're talking about, and I really do agree with it. But I just think it's important to understand that we're probably talking about it from a perspective more than anything else. Let's see what we think money is for. H says using money as leverage for a healthy and happy life instead of letting it be a stressor. Okay. Day Swag says I spend money on things that are important to me and I don't allow some amount of debt. And I don't allow some amount of debt still allow me to sleep at night. Tommy says I said no, missing, not knowing how much money my future self will need after retire. Okay, got it. So for Tommy, it sounds like we need to do a roadmap analysis. That's what the fix is there. So for Tommy's element is essentially running the millionaire roadmap. I'm looking to grab the millionaire roadmap. Here you go. Millionaire roadmap. And the millionaire roadmap, that's just a video for everybody. But the premise behind the video is to help you contextualize what we spend on where we're trying to go, and then to create a gap fill. How do we get to where we're trying to go from where we are today? But so starting from an ultra high level, what is money for? Oops, I need to change my little tool. We used to exchange value via a bartering system. I have a skill. I use my skill to help you. You have a skill. You use your skill to help me. I can teach people how to trade. I love teaching and I love trading. I've spent the majority of my adult life on this. I'm not good at everything. So when I fucked up my back and I working through the herniated disc that I'm still working through, I flew from California to Florida to go see a specific dude who is done with the spine and rehab what I have done with trading. The difference is when I got to him, I didn't really get there. Like I didn't come there and help him out with a bunch of his shit. Although I tried. I always try to add value, specifically from like a content creation standpoint, because he's getting on YouTube and stuff. But that stuff aside, what I gave him was something else, a standardized bartering tool, because I have accumulated money doing other things, and then I can give money to him so that he can do shit that he wants to do with the money, even if there's not a direct transfer of skills between us, if there's no liquidity otherwise. Money is essentially the bartering system on roids insofar as it provides liquidity. Because if you go to a baker and the baker doesn't need shit from you, you can't really do a bartering exchange there, but you can give them money so that they can go do whatever the fuck they need. So the premise here is money is literally an exchange. That's all it is. And the way we get money is through expertise, effort, and time. Your money represents that stuff. Now, not all people's spent time, not all people's spent effort, not all people's spent expertise is valued the same. That's the reality of life. There are people that are working construction jobs that work objectively light years harder than other people in office jobs who make light years more money. The reason why this is important for you to understand and acknowledge is because as we go through the rest of this exercise, part of what we need to understand is how do we create abundance. This is the objective. This is the outlier objective with respect to money. And I have somebody scratching at the door. I think you know who. So, just as we were just able to get Thor a brand new play rug because his last play rug was getting a little worn out, that takes money. However, if you don't have abundance, spending money on a new play rug for your dog is completely nonsensical. And it's the absolute worst possible way to spend your money, probably. But we think it's worth it because the portfolio manager here likes it. It's actually so funny that on the video, you guys can't even see like his facial features and stuff because he's too dark. This is actually hilarious. You can't see anything. They can't see you. Look up here. Look, see, he has a face. He will fight. This is what we talk about, the moray eel. So he does just like a little bit of a mouth open thing. That's his attack. That's his attack vibe. Look at those chompers. You see these teeth? Look at these teeth. Look at that tooth. Nice. Nice. You got chompers. Get my ugly face out of the way. Get back to this. So when it comes to money, one of the easiest things you can set your sights on right in the beginning is to create abundance. Now, in order to create abundance, a lot of things have to happen. And let's talk about what those things are. What I want to grab is this, which is just like a general overview of two things worth our discussion. Cool. So we just talked about this idea of abundance. The reason why abundance is so important is because when you have abundance, that comment somebody made earlier that's really, really accurate is that money becomes an accelerator. And for a lot of people, if you think about what are the most common sources of friction within a family, within a marriage, money is typically one of the very top ones. Let's actually see. Let's put it. I'm genuinely curious. So what are the top most common causes of fights between family? Very first one, finances. Finances, financial concerns. I don't think this shocks anybody. And it's because most of us, if you're anything like me, which I imagine a lot of us are, if you're anything like me, when you don't grow up with a bunch of money, it's a source of fucking friction because you are dealing with a exceedingly valuable but finite resource. That's difficult. So abundance overwrites all of that. And I've used a few examples of this before, but to move on from this point, but to leave you with something. when I used to get something, I used to work really hard. And when I would get something, I would obsessively take care of it. And that's actually, I argue, a good habit, to be honest. I don't think that's a bad habit, but there was an unhealthy side to it. The unhealthy side to it was I would be so obsessive over the thing and trying to take really good care of it, is in that it would start to make people feel uncomfortable being around the thing. Like in my car, I still actually do. You can't eat in the car. There's no eating in the fucking car. You can eat when you get out. But there's other things about the car that don't bother me as much now. And it's because I can wash it myself. Or if I'm busy, I can pay somebody to wash it. Like there's little things like that. So it allows you, once you reach abundance first, to have healthier relationships with people. Because another thing that literally never happens is if I go out to eat with my friends, I will always pay. I will always pay. And I couldn't possibly care less, genuinely. If anybody, I don't even ask. There is no, don't forget to Venmo me. Here's my Cash App, PayPal me this. There's none of that. I don't fucking care. I don't care at all. Now, I've told you guys this story before because it's pertinent, because if you have good friends, they all end up sending me money anyways. And a lot of times they fucking send me too much for themselves. And I literally have to refund them because they start paying what my share like genuinely should have been. But that's just when you have friends, right? That actually care about you, and they don't care that I have money, and they're not trying to take advantage of me because I have money. They don't even really care to take, they want to pay their equal way. Point being, if you have abundance, it will ease literally all of your relationships immediately. The second thing is when you have abundance, you get to express yourself in the purest form. The purest form. That is true freedom. What's not true freedom is if you have to do things a certain way in order to appease somebody else in order to still be able to make money. And it's something we all have to put up with for a while. I think it's an important thing to put up with. It helps build some character. But it starts to become a real drag when you have to start sacrificing your personal morals, values, and standards in order to keep a job, to keep working at where you are. Abundance gets rid of that. That doesn't mean that you're an asshole. It doesn't mean that you get to be an asshole. You don't get to be an asshole. You still have to be a good person. But it does mean that if something is going on that directly conflicts with your values, you do not have to bend to them. You can stand up, and it doesn't mean you have to quit, but you can stand up and talk about it at least. You can say, I don't agree with what we're doing here, or I don't agree with this for this reason. And then you can do that with an open conscience and open heart and accept the potential consequences, because some places don't like that. So abundance enables this second component unequivocally, which is not freedom in terms of not being able to work. I've talked about this before, but this is probably one of the most misconceived notions that exist. And it happens when all of us are poor. And when we're poor, we think once we have a bunch of money, we're not going to do anything. We're just going to sit on the beach all day, sip Mai Tais, and then just live life like that, right? And funny enough, one of the things that I found once I started having more and more money is I found myself able to work on things that I care about more and more. And then I started looking at how much I'm working, and I literally started working way more when I had money, way more. And there's a reason why. It's because you don't have to trade your time for money from a pure time for money trade-off. You can accept slightly less money or no money and spend your time working on things that you genuinely care about and genuinely value. That is freedom. Freedom, in my opinion, is not being a lazy citizen that has a bunch of money, that just spends money on a bunch of material things, and you're just in it for yourself. I still think we should all be contributors to society. Now, admin note, this is Eric's opinion. This really is not anything you should take that seriously. But the freedom element is an objective truth. If you have abundance, you have true freedom. You have freedom of expression. You have freedom to spend your time, your most valuable asset, working on the things that you like. And that leads into the third thing. Money, as a reminder, is an amplifier. Money will not make you happy. It literally won't. I'm telling you it won't. And there's this hilarious thing, a hilarious thing that happens to just about all of us that end up making, again, I'm a peasant compared to some of the people that I talk to. Like somebody like Tom Sazonov, he has literally hundreds of millions of dollars. I don't know if he's a billionaire. He might be close to it. But he's done hundreds of millions of dollars from business sales themselves, not trading, not any of his actual income from a job. So the funny thing is, and I've learned this, and it didn't make sense to me for a long time, but it's actually funny because now I understand it. And when people have a lot of money, they say money doesn't matter. But guess what happens if you don't have money? It's about all you can fucking think about. So money is this really interesting thing that once you have it, you have enough, you actually devalue it. It's not that important anymore because you're able to do things the way you want, live your life the way you want, and do the stuff that you care about. So from an amplification standpoint, money allows you to literally amplify anything you're doing in a positive way. And it doesn't have to be done so in that if I'm going to go on a boat ride to Catalina, because it's a cool island nearby us here, that when I go for the boat ride, I'm going to have to get a mega yacht now just because I want a bigger boat for me and my wife to go. Right? It doesn't have to be that. But it can be while I'm on the boat that we chartered to go because we prefer to be by ourselves because we're fucking hermits, believe it or not, that when we're on the boat, we can be really nice to the people that are helping us get there, and we can tip them well when we get there. We can offer to buy them lunch. We can make somebody else's day a little bit brighter. And for me, that brings me a tremendous amount of joy, genuinely, a tremendous amount of joy. Another way for me specifically is it allows me to do this. It allows me to share my experience and my skill set broadly with everybody for free. And it allows me to do it in accordance with my values. Because if we take a quick stroll, let's just take a look. I'm going to grab a incognito window, again, just so that it's not adulterated by anything that I have. Let's go to YouTube and let's look at options. Let's see. So we got this one. I don't know this. I don't even know this dude, but this looks good. Let's see. I'm just seeing what the first. Yeah, that's okay. This looks fine. 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 Shout out to our boy Benjamin. I have a call with him tomorrow. We talk every week. He's the homie, but you should definitely check out his work because he's fucking hilarious. And here we go. So which one is this? This is 1, 2, 3, 4, 5, 6, 7, 8. 8 videos in. And we see options trading in 10 minutes. How to make $1,000 a day for beginners only. Now, the reality is that video is going to get clicks. It is unequivocally going to get clicks because who doesn't want that? But the reality is that it's not really representative of what this looks like. Same thing with looking at a couple of these. They made $1 million off of some Tesla calls. There's a bunch of different videos like that you can see in here. So this person's talking about making 270% in a day. how to get big profits, simple strategy for beginners, make big profit, how we made $4,800 in a day sitting on a private jet with like a gold champagne bottle. Trading became easy. They cracked the code. That's pretty awesome. Trading does become easy though. That's like legitimately true. This dude's talking about is 46.89 in 13 minutes. I'm not trash talking these things in and of themselves, because I've made equivalent to a lot of these actually in different time frames. So the point is you can make a bunch of money, but the reality is the majority of these people are tailoring these kinds of videos because they do well, and they do well because they prey on people, and that's what performs well. Meanwhile, I'm here, what is it? 18:15 on what is today? Wednesday night with 42 people on a live stream. I literally couldn't be happier. Doing this with you right now. The only way that that's possible though is because fortunately I have some money. If you don't have money, you can't do this. Like, this becomes untenable as a business model. And I've made this clear with how much I make off of YouTube. The amount that I make off of YouTube compared to the amount of effort in is literally disgusting, meaning it's not good. It's fucking terrible. I make very little money off of YouTube. So if I was trying to do YouTube as my actual income source to actually make money, like my friend Benjamin, and Benjamin does really well, 2.2 million views. But guess what? When Benjamin is making this kind of video, he has to make it from the perspective of what will do well. And he actually will talk to you a little bit about it. I'm not going to talk about a bunch of his business, but we know that if you're doing something in a way, optimizing it for what's going to do well versus what allows you to express yourself as you want, there's still a constraint there. So he does a great job and he makes incredibly good videos, but he still has to keep that in mind because that's a big part of how he makes a living. So he has to be careful about it. So this goes all the way back to it being an amplifier. It allows you to spend your time on things that you care about. It allows you to spend time on things that you value. It allows you to truly be free and do things in a way that you think are best. Okay, next, robustness. The concept of robustness really comes back to this idea of abundance. But robustness is that we have a defined system, a defined plan that is sustainable. So first, if I think about the different ways that somebody can make money. You can make money from a W-2. You can make it from contracting. You can make it from freelancing. You can make it from side hustle. These are things where you're exchanging like your primary time. Then there are passive things that you can do in conjunction or active alongside it. You can have different kinds of investing. Investing breaks down into a bunch of buckets. You can have real estate. You can have buy and hold. You can have crypto, which kind of fits into this. I don't know why that gets its own bucket, but it does for now. You can have, I've used this one before because I find it so interesting, sneakers. You can trade. So you can have other ways to build an income. It's funny because a lot of times people will say like, Eric, if you make so much money and stuff, like why do you even have a Patreon? Which is it's a great question. The reason is because I spend so much time sharing all of this genuinely really hard-earned experience and knowledge, and I spend so much of it for completely free. But there's still cost associated not just with my time. There's cost associated with maintaining an email, a website, paying video editors. So not only am I spending my time, which is genuinely my most valuable resource, and sharing experience that has taken me now 18 years to develop, just doing that pro bono essentially. And then you layer on top the cost. Like, I refuse to pay into this thing on top of all that. Like, that's just fucking dumb. And it's not robust. This is why you see people with a lot of money that still do things to make more money. It's because in order to do things, you have to have a certain amount of resources. And the robustness aspect is to make sure that you can continue doing what you love. If what you're doing is feeble, then you have a problem. So when we're talking about robustness, when it comes to the money mindset and the money mindset exercises, it's having multiple irons in the fire. You choose your own adventure. You can have as many of these or as few of these as you want, but you can't have too few, because there's a reality that we have to discuss that's ugly. If you're like most people, the average, you have a W-2. And then if you're like most people, you have maybe a retirement account, which you can't really touch, but you could. It's just going to be penalized. Your W-2, this is one bad boss. I don't know why I'm going to do bad twice. One bad boss, one bad fiscal year, one bad project, one unfortunate accident, away from not fucking being there. This is not robust. This is a unbelievable single point of failure. Literally, your livelihood is attached to this one fucking single point of failure. Unwise. You don't get to control this. You cannot have a single point of failure like that. Okay. So now I want to start talking about the actual money mindset exercise. And again, we're going to do an actual case study tomorrow, but I want to give people the tools to essentially do your own case study for yourself if you prefer that. So the first thing is understanding, and this is the first portion of the money mindset exercise, is this: marginal utility maximization. What this means is we are taught from times of being little tiny kids. This is one of the hindrances that we're going to talk about. We're taught from the time that you're a little kid that there are certain things that you're supposed to value, you're supposed to care about. And one of the signs that you made it is you have a nice car. Another sign that you made it is you have a nice watch, and all this other bullshit. The reality is that starts to become society's imprint on you of what society says you should value. Now, this is not to suggest that society's inclusion here is all bad. It's not, because there's a social contract. You can learn a lot from that social contract, but you cannot get to the point where whatever society is valuing starts to overwhelm what you actually value, what you personally value. So the marginal utility, the money mindset and marginal utility exercise, that's what it's actually called in its entirety, is designed to help us identify what, I don't know why there's an E after what we truly value. And the reason why I emphasize this idea of what we truly value is because it gets rid of this judgment, self and external. Forms of self-judgment essentially place, both of these actually combined, first, place a glass ceiling on your performance. Now, for me, a form of self-judgment is, I used to say this all the time, actually. I used to say, people who buy designer clothes are dumb. I'd say if you spend that much money on a designer clothing brand when you can get a cheaper version, like, you're just dumb, right? You're just spending money on the same fabric, on the same thing. That is a poor person's understanding of the world. That was my understanding of the world. And I used to say stuff like that because it helped me feel better about where I was at in life and where I was likely to end up in life. So this idea of rich people are dumb, rich people are selfish, rich people are blank. What we're doing is we're applying this insane mental manipulation. We're taking an entire category of people, we're making entire judgments about them, and typically they're not nice judgments. And think of what that does. Does that make you aspire to be like that? Of course not. Why would we aspire to be dumb? Why would we aspire to be selfish? We don't. But we say these things about this class of people, and it starts to literally create a cognitive dissonance in the old brain housing group, where we subconsciously will say, well, I don't want to be that because it's all of these nasty things that I evaluate. It's pure fucking bullshit. Because here's what I've come to learn once I developed money. Here's the big secret. The person that has money gets to pick what the fuck they want to spend their money on. If they choose to spend their money on designer clothing, which I don't get, their fucking choice. Because guess what? They've built the abundance to be able to willingly pay $200 for a t-shirt that they know costs $16 to make maximum, including the designer prices for the design on the shirt. That's the self-limiting side of this. We do it in all sorts of ways. We do it in other ways where we say things like, I don't need this. I don't need blank. I don't need much. Now, there is an insanely delicate balance that has to happen between, and this is something I've reconciled with myself, and I'm not done yet, actually. This is something that's ongoing for me because I'm a big student of Stoicism. And Stoicism preaches expectation management. Stoicism preaches that we should be content with what we have now, and that one of the largest sources of dis-ease, not disease being sick, but dis-ease being not at ease, is the gap between where we are and what we train ourselves to want. I think that makes a lot of sense. It's actually really enlightening. I also don't fully agree with it because I think that kind of dis-ease causes action. It causes us to do things if we're uncomfortable. So I think a certain amount of dis-ease is needed to precipitate action, to cause people to do things. Okay, back to this glass ceiling thing. If you're taught to be too content with where you are with what you have, then it tends to lead to complacency, not looking for more. That doesn't mean the inverse. In my opinion, the way to balance this is we should continually remind ourselves to be exceedingly thankful for where you are. We're all lucky in a lot of different ways. This is one of the things that I find so funny when I tell people like, oh, I have a herniated disc and it's literally been now 6 months that I can't bend forward at the hips. Like that kind of sucks. But people are always just like, oh my God, that's so bad. That sucks. And I appreciate the empathy. I appreciate the gesture, but I always remind them like this. I actually, if I could wave a wand and have a different past 6 months than what it's been, I don't think I would. I genuinely don't think I would. And it's because it's taught me so much. It's made me think about things in such a different way. And not to go super far down a rabbit hole, but it's helped me understand my dad and like my biological dad and all of his bad behaviors, his alcoholism, all the stuff that he did that as a young man I didn't understand and judged him too hard for. It's made me understand all of that much better. So back to this broader idea though of these glass ceilings is that most of the glass ceilings that you're going to come across are things that you put on yourself. And we should be exceedingly thankful for where we're at, for the luck, for the fortune, for the work that we've put in that landed us where we are today. But in my opinion, that does not mean that we can't be hungry to grow and try to build abundance. It just needs to be tempered. That's my opinion. So a big common hindrance, though, are these different kind of self-judgments, external judgments that manifest as glass ceiling. And then it becomes this thing where subconsciously there's a big gap between where you are and where quote unquote rich is and your opinion of it. And that subconscious brain is so powerful. It's literally going to prime all of your actions, what they are, what they do, how you behave. And if you behave in a way where it's like, yeah, I don't care about being rich. That's just dumb. It's just excess. It's just selfish. Then you're literally going to take a bunch of subconscious actions that don't lead you there because you don't value it. You don't care about it. I think that you can be an insanely impactful and helpful rich person, and everybody should be that. Everybody in our community should look to be exactly that. You should look to be an outlier rich person. People that behave differently. That's what we're here to do. So now let's talk about the last hindrance, which is this near-term expectation. This is where we overly weight the near-term outcome of spending, or the near-term outcome of how we spend our time. And this completely derails the longer-term objective of where you're ultimately trying to get. The funny thing about this is that the more you sacrifice and the earlier you do it, ultimately, the earlier you get the reward. But you have to sacrifice and embrace delayed gratification early. So to recap, what an outlier mindset is, it's a different way of thinking. It's a different way of thinking about money, and it's a different way of thinking about your relationship with money. It's the pursuit of healthy abundance. It's understanding that money provides true freedom. It does not provide happiness, but it's an amplifier for everything else that you choose to do. Some of the most common hindrances to developing this are self-imposed. It's through judgment. It's through the internalization of external factors, societal pressures, family pressures. There's another thing I see all the time where people are like, well, I don't want to get too much money because then everybody's going to bother me for it. What the fuck does that say about the friends you have? If that's the case, that's already showing you that you have a fucking cancer around you that you need to fix without money. What the fuck? So the judgment can be the internalization of external factors. It can be external factors, or it can be purely self-imposed. But we have to start stripping away those judgments and those judgment statements that we say, because it primes our subconscious brain. What this means is, if before, when I would say designer clothes are dumb, anybody that buys designer clothes are dumb because it's just spending more on the same thing you could get, I started thinking of it differently and started thinking they've made enough money to be able to spend the money on whatever the fuck they want. That's pretty cool. That doesn't seem so dumb to me. Now, there's the reality where a lot of people like to present themselves as being way wealthier than they are. That's another common thing, but that's a completely different thing. This is the other thing that poor people do, where they say, oh, rich people don't spend money on that. Real rich people are in a Toyota Corolla. They're fucking not. I'm telling you, they're fucking not. I know quite a few of them at this point. They're fucking not. One of my business partners, who's actually the dad of one of my friends, accidentally forgot that he put a bid on this tricked out Ford Bronco Raptor. Literally forgot about it. And then he got an email that he won it. And he's like, oh shit, I have to arrange delivery for this car. That's like a different amount of money to like put to put a bid on something that's, I mean, it's not super expensive, but it's not cheap to put a bid on something like that. Just fucking forget about it until you get the email that you won it. That's hilarious. But that's when people say shit like that. Oh, rich people don't spend on blank. It goes back to this thing, which is your homework, which is the culmination of this entire skill development section, which is understanding your personal marginal utility for things. And when I say things, I don't just mean objects. I don't mean what you can spend your money on. I mean what you value spending your time on, what you value materially, what you value immaterially in terms of society or in terms of causes that you care about. So there's an exercise that I built specifically for myself originally. It's called the Money Mindset Marginal Utility Exercise. And what I did was give myself a few scenarios to play through. And I'm going to give you a small outline of it here. For those that are in the Patreon, there's a download that's available to you. It's in the shop. Everybody that's in the Patreon gets it for free 99. But if you're not in there, don't fret. You literally can build your own like this. The first thing I did is I created 3 scenarios. We have 1, survival, or kind of minimum needs. We have 2, which is track or current path. And then we have 3, which is overwhelming abundance. So what I do here is then I paint a series of, I guess if I'm going to call these scenarios, I should call these down here like situations. I gave myself different situations. So I would have things like material situations. I would have time situations. I would have priority situations. I would have, what the fuck would I call it? What the fuck would I call it? Time, priority. It's like shit that you care about. I don't know what to call that. But it's like the stuff that you, it's like if you care about causes and stuff like that. What the fuck would I call that? Value, that's the only thing that was coming into my mind. So yeah, I think that's good. Thank you, Roderick, for helping me out there. But like value, I think that's exactly correct. So then what I did in each of these is I came up with a series of questions. So for example, one of the material questions is buying a jet. What I do before I go through all of these is I fully adopt this scenario. So what I mean by that is I sit down by myself and I think of not things that I would like to have, but I think about literally survival. I think about the things that I would need in order to literally survive. Material, buy a jet, survival. Absolutely not. No way. Don't care. Then what I do is I keep this scenario in my brain and I go through all of these cases. So I spend a few moments truly adopting this scenario as my paradigm, as my current state. And then I go through all of these. Roderick says, if it flies, floats, or fucks, just rent it. So fantastic statement, but it's another poor person statement. I get it, but it's another poor person statement. Uh-oh, it's dinner time. Let me get, because Roderick, don't forget, the Russian rent-a-wife thing, I think that's still a thing. You just buy a Russian wife. Well, I don't know. There might be difficult to do that now with all the, all the hubbub between Russia and Ukraine. That's kind of a unfortunate outcome of that, if you ask me. But I mean, I'm not trying to rent the Russian rent-a-wife. I'd rather just buy. I don't know. That sounds better to me. Just my 0.02. Let me get the rest of my dinner order. Here we go. Okay, cool. Sorry. Thanks. So now I go through all of those. I go through all of these cases with that scenario as my scenario. Then I switch scenarios. I say, I'm on my current path. Whatever my current value is now, whatever the current run rate, because you all should have done the millionaire roadmap, which again, that's the video I shared earlier. I'll share it again really quick. If you haven't done the millionaire road mapping, like you're fucked, because you have no understanding of what you're trying to do now and how that feeds into your broader objectives. Royington, he says money corrupts. See, like that's another poor person. It's like that's objectively another poor person statement. I understand your point, and money can corrupt. But guess what also corrupts? Lack of money. Because who are the people that are breaking into people's houses? Who are the people that are trying to rob people? The people without fucking money. So again, and this is my exact point. I'm glad that you brought that up, Roaring Titties. Again, like it's because we as poor people, which I mean, I still have that part of my brain, we say shit like that because it still makes us feel better about our current scenario. But it's just what poor people say to placate themselves. Money can absolutely corrupt. I agree with you. But if you don't have money, that also can corrupt. Roaring Titty says, but look at the richest man on the planet throwing salutes while he's drunk with power. Sorry, not sorry. Again, I don't care to get into any of that. That doesn't matter. Just because you might not like Elon, that's okay. You cannot like Elon. That doesn't make having money bad. That also doesn't make money corrupting people as a generalized rule. Like that's just the reality of it. Again, I don't agree with your assessment of that, but that doesn't, like, my opinion there doesn't matter really, nor does yours. Your opinion is whatever it is, and you should have it. You're entitled to have it. But the broader point that I'm making is that that's not money. Money doesn't inherently corrupt or not corrupt. It's the person, because there's plenty of poor people that don't rob people. There's also plenty of poor people who do rob people. So, yeah. Wheelshot Joe says he was just really excited. I don't think that was a fucking Nazi salute. Like, it's crazy that people are taking it that way. But what happens is when people don't like somebody, they will interpret everything they do in the worst light possible. That's standard fare. People do it with people on the right. People do it with people on the left. But anyways, no need to dive into that. Everybody should have their opinion. That's the takeaway there. Everybody should have their own opinion, and that's okay. So we go through all of these. After doing that millionaire roadmap, which I threw in the chat again, we now understand our track, what our current path is. And then we go through this same series of questions. We say, do I want to buy a jet on my current path? Maybe, maybe not. Kind of depends on what the trade-off would be. So probably not for most people. Then we go through overwhelming abundance. Now, when I did this, I did it in order of 1, 3, 2. This order. I guess I should write it out here. 1, 3, 2. 1, 3. The purpose of doing it in order of 1, 3, 2 is 1, helps us understand how fucking good we have it and how thankful we are to be here. 3 gives us the context of if you had essentially unlimited resources, would you do this? So say, for example, if I was 100 billionaire, would I buy a jet? Abso-fucking-lutely. I would. I absolutely would. Why the fuck wouldn't I? That would be great. Instead of having to fly commercial to go places that I want, to be able to have jets that I can fly VFR direct with my wife, my dog, and go wherever we want. Like that is very cool. So poor Eric would say, no, I don't like that. I don't want to do that because, buying a jet, it's a lot to keep up with. It's annoying, it's just stuff to placate me and make myself feel better. But in this scenario of having overwhelming abundance, $100 billion, hundreds of billions of dollars, sure. Of course I get the fucking jet. I get the yacht too. Why not? There's no reason not to have the yacht if I don't want. I can get the yacht. I don't have to use it myself if I'm not going to be on the yacht all the time. That's what I used to tell myself. Why would I get a yacht? I don't want a yacht. because, I wouldn't be on it all the time. It'd spend most of its time just sitting there. That's a waste. Guess what you can do if you have a bunch of money, if you have true abundance? Let your friends use it. Let other people use it. Share it with other people. So again, when we're going through this exercise, we have to be so cautious of all of these little things that we've put up in front of ourselves to make ourselves feel better for where we are, and to essentially cast this idea of being rich and having true abundance as being bad, because it's not. So as we go through the money mindset exercise, here is the ultimate output. Once you create the different material questions that you might ask yourself, and I think probably 10 to 15 per one of these is good. So a good example for time is, would I have a job? For priorities, this is things like, would I value health? Versus work. I guess we can just bundle values into priorities, because the other thing that would be here is like, what causes do I care about? That kind of thing. So as we go through all of these, we should have 10 to 15 situations for each case that we run through in the scenarios. And the ultimate output of doing this, and this is, again, the exercise that you guys should do. I'll actually write it out so that you can take a screenshot. Might be a little easier. I'll close this. And then I need to see if Mel put her order in. She hasn't. This is the main takeaway, is for step 3, which is, what the fuck? The main takeaway from this exercise is step 3. And what we're trying to do here is we want to have an exceedingly clear understanding of the stuff that we genuinely value. These are things that we're not capping ourselves. So, for example, I know for a fact that having true abundance, hundreds of billions of dollars, I genuinely don't want the yacht. I don't want the boat. And it's because, as cool as that would be to share that with other people and to, let other people use that, have fun with it, I don't think in general it would provide the overall utility that I could gain from other things. That's just my opinion. So what I do is I try to figure out the things that are worth the trade-off. And if I can find things that are worth the trade-off, meaning if I want to spend X number of dollars on this material thing that I care about, but it's going to make me work X% longer, maybe that's it. But at the end of it, you should have very, very clear takeaway of the shit that you truly value, trying to remove all of these different guards that get put up to reconcile where we're at versus where we want to be, to also account for things that we might be judged by society, but putting that aside and focusing on what you care about. So like Roaring Titty is talking about building a sanctuary for groundhogs. Like how cool would that be? Titty says, I just want to feed and house people. How cool is that? Right? Like both of those things are really, really cool to be able to do. And if you have true abundance, that's essentially how you get there. So that is my business pitch on the money mindset exercise, why you should care about it, what you should do to get to the end of it. And then tomorrow during the stream, we're going to go through an actual case study on how to work through the money mindset exercise and then to arrive specifically at what to do with it. Meaning, how do we take the output from the money mindset exercise and then turn it into something that's actionable? How do we feed that information into our plan? That is the goal for tomorrow. So I hope this session's useful. I hope that the skill development idea is fun for you guys. It's really fun for me because I think spending a little bit of time getting really, really specific on some stuff to look at, I think is useful. So if there's stuff that we want to add to this list, if there's specific skills or specific ideas that you want to expand on, let me know. And we can absolutely build this out with other stuff that we want to spend if there's a specific skill that we want to grow. Lauren says, I prefer animals to people. I actually fully agree with that in general. I think a lot about dogs and how incredible dogs are. It's like, it feels like we don't deserve them. They're just so good. They're always just happy to see you. And yeah, I don't know, feels like a lot. So let's grab, where did we do this? Money mindset. So for those that are trying to find these videos, what I'm doing is adding a key here. So rather than using like dates and timestamps, I'm actually going to add the link to the video here so you can find it. And then, as you know, what we're doing with the videos is I'm adding timestamps so that you can easily find the section. So the way to navigate this sheet is if there's a link there, this tells you what video to go to find the information. And right now you can access this on the website. So I'll show you where it is just in case you miss one or you want to go back and check one out. So we just go to resources, we go to the trading guide, and then, oops, something went wrong. That's not good. We'll figure that out. But it's going to be added down here as a tab. So I'm just going to import it so you'll be able to see it. So that's the game plan. Any other questions or anything else that you guys want to hit real quick before I wrap up and obviously fix whatever's up with that file? Kind of annoying. All right, gang. That wraps me up. If you guys need anything, hit me up in the Discord. I'll see the pro members tomorrow on the stream, and then I'll see everybody on Friday for options trading basics. For Friday, we have, what is Friday? The 20, this one, option pricing. So that is the game plan for Friday, is we're going to review option pricing. Let me know if you need anything. Be an outlier. I'll see y'all later.